Good evening, students. We are starting today the chapter number second chapter in the job order costing, and this chapter is about cost accumulation system. That how the cost will be added up into either in the job, either in the project, either in the process, right? All we will be studying. So the topics we'll cover in this chapter will be job order costing, process costing, activity based costing, and life cycle costing. So you can see the cost, either material cost, labor cost, overhead cost, all cost, right, will be added either if you are doing the uh, product, you're producing the product that is uh, customers give you the product, and you are not, means you are producing the heterogeneous product, right? If you are producing the heterogeneous product, then it is called basically the job order costing. So if I'll explain you the difference between job order and process costing, right? So job order costing is basically, right, we can say it is let me say job order costing, process costing, right? If we differentiate both of them, so we can say homogeneous, that is same product, one product, right? So homogeneous product, basically we are making just like in process costing, right? Process costing, we are making the homogeneous product that is the same product. For example, if it's a cement factory, if it's a paint company, so they are making the same product every time. Whereas in the job order costing, basically the customer will be coming and they will be giving you small orders, right? And so that you are not producing one product. For example, furniture company, or you can say publishing company. So these are the companies that customer will give them order for not very big quantity. They might give the small quantity orders, right? So under job order, this is a small quantity, right? And here is a big quantity, right? And here we have in the process costing, as I told you, paint we are making, or we are making just like petroleum companies are there, right? These are basically producing the, working on the process costing. Whereas under job order costing, I gave you example that might be publishing company, just like if you say that in the banks, if somebody is applying for the loan, so they cannot, the bank cannot make the product, right, same product they cannot make for everyone. Basically every customer's evaluation, their feasibility will be different. So that is why the bank evaluation of the systems of who will, for for whom they will give the account, for whom they will not give the account, for whom they will give the loan, for whom they will not give the loan. This is the individual evaluation. So this will be considered under the job order costing, right? So we say job order costing is small quantity, process costing, big quantity. And here heterogeneous basically means that you are making different products, right? Different products. So these are the main differences, right? And under the job order costing, material, right? Material actual, labor actual, but overhead will be budgeted, or let's write estimated, right? Whereas under the process costing, right? Here material will be under process costing will be actual, labor will be actual, and overhead will also be actual, right? Uh, okay. So we understand that material actual, labor actual, and overhead will be estimated under job order costing. The question comes, why we are not using overhead also estimated under the job order costing. Basically, we know that uh, if some, let's say somebody gave us order for 500 units. Let's suppose some school has given order to a furniture company to make the 500 chairs, right? And they will give their own specification, what will be the size, whether they will be hand on it or not, whether it will be made of steel, wood, or plastic, or mixture of it combination. So we understand that now the producer, that is the company which is making, which is working under job order costing, he is having a small order, right? So how, let's say somebody has given us order in January 1, suppose, right? And the job they have finished up, let's say in 20 days. January 20 they have finished the order. Now when they have finished the order in 20 days, so they have to, they will see that how much material cost will go on to the product, how much labor cost will go to the product, and how much overhead cost will go to the product, right? So this is the decision they have to make for that. As we know that under the, for example, if we say the chair is made, so we can easily estimate that how much, let's say, wood chair we are making. So how much quantity of the wood is used. So that is called traceable. So material is traceable. We can say that how much material is used. And we also know that labor will also be traceable, right? Labor will also be traceable because we know that how many hours have been worked on one chair, and we can estimate on the 500 chairs. So total job cost of the labor, total job cost of material, we can estimate, right? Whereas if you see the overhead cost, so overhead cost is, let's say, how much the rent cost that we can allocate to chairs, right? So we do know that job is started on January 1 and job has been finished on January 20. So in 20 days, basically, like we have completed the job, right? In 20 days, we have completed the job. So we don't know how to allocate the overheads for that, right? How to allocate overhead to one chair, right? Because you are not making in the same time, you might have not one order, not one job. You might be working in plenty of jobs. So you have to separately keep that how much will be the material labor cost will be coming on the job one, how much will be going on job two, how much will be going on job three. This is the estimation that you will have to make. Now, as I told you that material, as you know, in the previous lecture, we discussed about, let's say if you're making a chair, so 20 quantity, price is 10. So 200 will be the cost or material cost on the chair. But labor cost we have 30 quantity, 50 is the price for labor per hour. So 1500 will be the labor cost. But what about the overhead? Overhead, we have plenty of them. We have rent, insurance, indirect material, utilities, indirect labor, depreciation, and maintenance. This is only few examples. In reality, there might be so many types of overhead we will have. Now, the question that comes in mind that how much the rent portion I will put on one chair overhead, right? How much the insurance I will put on one chair. Remember, rent bill we pay monthly, right? Or quarterly or sometime yearly. So that bill basically, although rent is quite a much fixed, we do know in advance, but we don't know. For example, if our rent is here is mentioned, suppose rent is mentioned 120,000, right? 120,000 we are producing the, we have 120,000 is our rent, but we want to know the per unit overhead cost. So we don't know in from January 1, you're giving delivery of this job only in January 20, and you don't have one job. You have a lot of jobs during the year. This is the overhead, this is the rent cost for the whole year. So how many units you will be making from January 1 to January 20, and what will be the overhead cost that will come on one unit. Remember, we are not making the same type of product which is using the same number of hours. So that is the big problem, that how much the rent portion, how much the insurance portion, how much the depreciation portion we are going to put on one share. That is why we have already discussed what we do. We make a overhead cost pool and we add up all overheads, right? That might be budgeted overhead if you have budgeted data for the whole year, or that might be the previous year's actual data, right? So we have estimated, let's say we have 400,000 total overhead, and let's say in the last year we have worked 10,000 hours. So if you see 400,000 is the overhead cost, 10,000 is the number of hours. So what will be overhead cost per hour? So how we can calculate? Simply 400,000 divided by 10,000, that will be overhead cost will come 40, right? So overhead cost will come per hour, it will come 40. And when I want to charge to the production, when I want to charge to the job, so what I will be doing, basically, I will be taking I will be basically taking this to my job cost, right? So I will be taking it to the my job cost, right? So here, right? So this is we discussed already for T this. So I want to charge to the job. I want to charge to the job. So I told you that material we will charge actual, labor we will charge actual, but overhead we don't know how much rent, actual rent portion I should put on one chair, how much insurance portion, indirect material, utilities, depreciation, everything. It's very difficult. So that's why we have to find out the overhead absorption rate for 1 hour. Once we calculated 1 hour, so how we can do that? Already we worked 30 hours labor, right? 30 hours labor. So that 30-hour labors multiply by our overhead rate, that is coming 40, right? So 30 into 40, we can easily estimate that our overhead cost will be 1200, right? This is the application that we will be going on the job order costing, right? Now here, if you see, uh, here I have made little example, right? And I'll be working here. Let's see, we have job order costing, we have, and material we are buying for 100,000. If we buy the material 100,000, so okay. Okay, so here we were looking about that material we are buying. So material we buy. So what will be the general entry? Entry will be raw material will be debit and accounts payable will be credit, right? So raw material is coming, so raw material debit and accounts payable credit. If you see in the accounts, how we will be recording this? This is our material account, right? This is our material account. So we will see 100,000 material is debit and our accounts payable account we can credit. Uh, Going before that, I think I should show you the flow chart. Let's see the flow chart here. This is the our overhead cost flow chart, right? If you see overhead cost flow chart, so what is going on here? If you see, we have material. So when we buy the material, so material is debited. right? That material can be direct material or that can be indirect material, right? Once we buy material, I told you that raw material debit and accounts payable will be credit. So separately you can make accounts payable account. So now material, we are making a flow of the cost. You know, material, once you buy, material is transferred to production. That is work in progress. Then once the work is completed, then it will go to finished good. And once the finished good means the goods are finished and the customer you got, so the from the finished good it will be transferred to the cost of goods sold. So you understand the flow. First of all, material comes, then production starts. You will put material cost, labor cost, overhead cost in the work in progress account, and then this once the production is complete, as number of units produced, so this will be transferred to our showroom finished good. Once it's transferred to finished good and it is sold out, so it means one more flow I can make it from finished good, it will go to the cost of goods. So this is the flow you understand, right? This is the flow you understand. So material is coming, the direct material one, it comes. So remember, direct material goes to the work in progress, whereas indirect material, it will be going to the factory overhead, right? It will go to the factory overhead. So here we have indirect material. You can see indirect material. So let's say we buy 100 units. Out of 100 units or 100 kg, 80 kg is gone to, let's say, work in progress, that was direct, and 20 kg was indirect. So indirect will be going to the overhead. As we know that overhead cost includes indirect material, indirect labor, and indirect expenses, right? That is why if you have any indirect material, that will go to the manufacturing overhead. So now tell me about that. What will be the flow of the cost when material comes? It is recorded where? Yes, when material comes, it is recorded where?
Purchase cost.
Hmm?
As a purchase.
Material inventory.
Yes, purchase
Open
or
like stock
inventory.
in. Yeah.
Marcel, when we are doing the cost accounting, so we follow the, you can say, perpetual inventory system, right? Under that, just like normal entry is purchase debit, account payable credit, but you have inventory system, so all material will say it's coming in the inventory, right? Under perpetual system, we say inventory debit and uh, we do it instead of purchase, we do the inventory debit, but it doesn't make much difference, right? So anyway, material is recorded in the inventory. So where the direct material will go once the production start, where it will go?
It will go to work in progress.
Work in progress, right? And where the indirect material will go?
Also work in progress, right?
No, you can see direct material
Indirect,
is going.
indirect, yeah.
Indirect,
Like,
you can say it's routing here and it's coming in the manufacturing overhead. So I told you already that indirect material, indirect labor, and indirect expenses, just like rent, manufacturing, rent expense, insurance, depreciation, all we have seen, all will be going basically, actual overheads will be going in the our manufacturing overhead control account, right? This is manufacturing overhead control account. So we understand that all direct cost goes to the work in progress, direct material goes to the work in progress. Similarly, once you incur the labor cost, so labor cost, direct labor cost is transferred where? In the work in progress, and indirect labor is transferred where? In the manufacturing overhead. Understand? Of control. Here mentioned manufacturing overhead control means this is the actual factory overhead account. Remember, this is the actual factory overhead account because we have one more factory overhead that is applied, that is the estimated overhead, that I'll tell you later on. So we understand that flow of the cost, we are understanding that material comes, it comes in the store, that is inventory. Once direct material, it will go to the work in progress, right? Direct labor will also go to the work in progress. Indirect material go to the factory overhead. Indirect labor also go to the factory overhead, right? So material labor task we have done. Then comes the factory overhead, right? So factory overhead, basically actual factory overhead will keep on right recording in our manufacturing overhead control account. That is the actual factory overhead account. So whatever cost every day, every month you will incur, you will keep on recording in manufacturing overhead. But you know, it is very difficult. We have already seen that we cannot find out that how much the rent we should transfer to job number one, job number two, job number three. So actual, you can say rent, insurance, depreciation, it is very difficult that how we can transfer to the work in progress. That is why we discussed already that in the job order costing, basically what we will be working on, we will be working on the estimated overhead. And I told you already how we find out the estimated overhead. I told you already that we cost pool of the last year or once the year end, right? Or budgeted cost of the year. So we will find out the overhead rate per hour. Once we know overhead rate per hour, then let's say how many hours worked on a job, how many hours worked on a job, that we will be transferring to that job. So probably on daily basis we can transfer, or we can transfer on the periodic basis, right? We can transfer. But anyway, we understand that actually the estimated overhead, it will be going where? It will be going to the factory overhead. Am I right? Okay, so direct material goes to work in progress, direct labor goes to work in progress, indirect material goes to factory overhead, indirect labor goes to factory overhead. Now comes about factory overhead, right? So factory overhead means the overhead cost, how much will transfer to the production, because all three elements, material, labor, and overhead are the element of the cost. All three should be done. So all three should be done. That's why how much overhead cost will transfer. So overhead cost, as I told you, will be estimated. So estimated overhead we will be calculating, right? We will be calculating right on the hours and then multiply by number of uh, rate rate into hours. We'll calculate and then factory overhead. So entry will be what for that? Work in progress debit and factory overhead applied credit, right? So as I told you already at the beginning of the lecture, some work in progress, right? In the work in progress, material will be actual, labor will be actual, but overhead will not be actual. It will be estimated. So that we discussed. Actual overhead, basically it's piling up here in the manufacturing overhead control account. Once the year will be ending, so we will find out that whether estimated overhead is more or actual overhead is more. We will see later on. So, but anyway, so once the work complete, it will go to finished good, right? Once the goods are sold, they will go to where? Cost of goods sold, right? So, Binish, can you tell me the flow from material to the cost of goods sold?
First, when we purchase a material, we put in the material inventory. From there, it will goes to the work in progress. Use of whatever material we use, it will go in the work in process, then finished goods. And
Then
any
after,
other indirect material, indirect labor will go to manufacturing overhead, then we put in the work in progress.
fine. So, and then when the goods sold, it will be going from finished goods,
In the finished goods product.
right? This will go. This is the flow of cost we have understood, right? Now, this flow of cost we have. So let me copy this flow of cost as well, so that it will be easy. Okay.
I have a question.
Yes.
Why sometimes there is manufacturing overhead in the direct cost, like here in the flow, in the chart flow?
Why it comes in the direct cost? Basically, factory overhead. You can say overhead. Why, right? Goes to the this. So direct, if you have direct expenses, just like we have transportation costs, royalties, etc. So some direct cost is there. So some direct expenses, some direct manufacturing expenses, right? They will be going to the work in progress, right? Because these are the direct ones. Marcel, you understand?
Yeah, yeah, clear.
So just like rent, depreciation, they are indirect. So they will go to the factory overhead, right? So we discussed already prime cost. Prime cost include but direct material, direct labor, and direct expenses. Anyway, so here, so we discussed basically here. You can see now we're coming to this. So once I told you that when we buy the material, entry is raw material debit or inventory debit and accounts payable credit, right? This is the entry, raw material debit and accounts payable credit. Then once we know that raw material is coming material debit and we say accounts payable credit. Once the production it is transferred to the production, material transfer to production. So of course we can say in the material it is coming, that is material, sorry, in work in progress it is coming. So work in progress debit, and from material it is going. So material account will be credit. So here we can see work in progress debit and raw material account credit. So understand, this is the flow we have. And then labor costs, similarly, we do know that labor we will be, right, once we record the transfer of this, we will say work in progress debit and labor credit, right? So labor costs incurred, so we'll say work in progress debit and wages payable credit, right? And that will go basically, we already seen this is the wages payable account. Then we have, after that we will be seeing that we have overhead cost. So overhead cost, when factory overhead, I have written particularly applied. Applied means estimated, right? So what will be the entry, because the work in it's overhead is coming in the work in progress. So I will debit the work in progress and I will credit the overhead applied, right? So overhead applied. So let's do this question now. We have material, we buy how much? 100,000, right? If we buy the material, of course I'll do 100,000 material debit, 100,000 material debit, and what I will do, I will do accounts payable credit. So there's no need of accounts payable recording because we are recording only those material, labor, overhead accounts, etc. only. So and work in progress and input. So we are not recording other accounts as well. So anyway, so it is coming. So we'll say 100,000 is coming. Now out of this dimension, material transfer to production. Or if I say material transfer to production, or if I say direct material. So once the direct material transferred, so where it will go? Where it will go? Direct material.
Work in
Work in progress.
Yes, work in progress. It will go to work in progress. So work in progress, how much we have? 80,000. So 80,000 is basically coming in the work in progress and going out of the material account, right? So next we have labor costs incurred 150,000. So you can open the labor account and you can say work in progress debit and labor credit. So work in progress debit and labor credit, right? This is the NTV record. Then we have overhead costs at 150% of labor costs. So they have made it very easy that whatever the labor cost you have, 150% of labor cost we have overhead estimated. This is the applied overhead. So what entry I'll pass? So we discussed already that factory overhead, work in progress debit and factory overhead applied credit. So work in progress we will debit, right? Work in progress means 150% of 150. That will be 150 and half of 150, that is 75,000. So 150 plus 75, that will become 225,000, right? That will become 225,000. Okay. So what I do that I remove these things, right? Wait. So we are doing here. So now what will come? How much I should write down here in the material? How much to write down? How much material by? 100,000. Right. So that will come here, material debit and account payable credit. So now next entry, we direct material transferred. So where it will go, Manohar? Marcel, where it will go?
To the material,
Yes, where material will go?
to work in progress.
Work in progress. So we can say 80,000 here, and because it will go out from the here material, 80,000 will be credit. Next thing, direct labor. So direct labor will do 150,000. So in the work in the labor, the work in progress, I will write down 150,000, and I will be recording 150,000 here. Fine, 150,000 here. Okay. Next we have factory overhead. Factory overhead, they mentioned 150,000. So where will go factory overhead? Where we will record this?
The overhead,
Yes, factory overhead, where will record?
we will multiply 1.5 by the labor, then we will put it in work in progress under
Working.
overhead.
That is coming to 125,000.
Yeah.
What will be the other entry? Work in progress debit. And where the other entry will go?
Work in progress. After work in progress,
Yes. Okay. Binish, can you tell where the work? What will be the other entry?
Overhead applied.
Overhead applied, because this is estimated. We'll record work in progress debits. Of course, applied will be credit. So 225,000 we have recorded here, right? 225,000 recorded here. Now we have next thing. So material labor overhead we have recorded. So and they mention about actual overhead. How much? Actual overhead, indirect material, indirect labor, insurance, depreciation. So where the actual overhead will be going? Applied or control?
applied.
No, estimated overhead is going to applied, right? 150, we recorded 225. So work in progress debit and to production and this credit. So where is the actual overhead? We will be recording basically in our overhead control account, right? So overhead control account debit and indirect material, indirect labor, insurance and depreciation will be credit, right? This is what we have done. So this is all we recorded. Now, of course, they mention about proportion of under applied overhead. So now let's see, we have this production is complete. If we have done this, so let's say production is complete and all is transferred to work in progress. Sorry, finished goods. What will be the entry then? How will record that production cost transfer to the work in progress to finished goods?
Finished goods debit, work in process credit.
So work in progress credit. So we can here record that here will be 225,000, right? So that will be reference you want to write down. So you can say it's going basically into the finished goods and finished goods. Okay, and then it will be coming all 225,000 will be coming here, right? It will be coming here like this. Fine. So this is we recorded.
Why only 225,000? It should be total of all material, labor, and overhead.
You are right. I thought it's total. So this is total is coming 455. You are right. Thank you very much. 455,000 is the if all completed. So 455,000, right, will be coming here. Marcel, Nohar, do you understand?
Yes, I do.
Okay. So 450,000 total of material, labor and overhead cost. Once, if suppose all is finished, so it will be going to the finished goods, 450. If I say that all is sold, if I say all is sold, so where it will go?
All sold to sales.
Cost of goods sold.
Cost of goods sold, right? Cost of goods sold. So here I will do what that that it is going to cost of goods sold, right? How much amount? Let's say all we sold to 455,000. That will be going to the cost of goods sold, and or right, cost of goods sold will be debit, and because it's going from the finished goods, so finished good account will be credit. So this is the flow I have mentioned, that material is going to work in progress, labor is going to work in progress, and estimated overhead is going to work in progress, right? And we can see that finished good work in progress amount is coming to the finished good here, and finally from finished good, it is, if it is sold, it will be coming here, 450,000, right? So is there any confusion you have in this understanding, in this flow? No?
No, sir.
Okay,
Clear, it's clear.
now we are coming that here is the issue coming. Issue is that we have we have our actual overhead total is coming 275, whereas estimated overhead is coming 225,000. This is the difference coming. So first of all, you tell me that which overhead should go to cost of goods sold. Finally, how much amount should go to cost of goods sold? The one that is estimated 225 or the one which is actual?
Actual.
Basically, we see that already we have estimated overhead 225,000. We have transferred to work in progress. But when we know that actual overhead is 275, so remaining difference we should transfer there in cost of goods sold again, right? So 225 means this 225,000 that came in overhead came in the work in progress, it has traveled to finished good, and from finished good to cost of goods sold, right? So here is the important point, is that if insignificant inventories, right, all overhead or either over or under applied overhead charged to cost of goods sold, right? So here I have considered that there is no inventory. What I'm considering here, there is no inventory. So it means insignificant means very small. Let's say in the material account, if we have very little material is still there in the stores, right? Very little material is there in the stores. Similarly, in work in progress, if very little material is there in the store, either no material, no work in progress, or very less material, means inventories either in the material or work in progress and finished good, either there are no inventories, or if they are there, they are very small. So then whatever the difference between the actual overhead and the estimated overhead, so difference, right, we will charge total to the cost of goods sold. Understand? So if there is no inventories or very little inventories, so in this case it means all is transferred to cost of goods sold, because inventories are not there, so all cost is gone to cost of goods sold, or most of the cost has gone to cost of goods sold if you have little inventories, right? So in these cases we do know that we will be transferring all difference of overhead to the cost of goods. Understand? So here is this we will say it is under applied overhead or over applied?
Under applied.
Under applied, because we do know that we have 225 applied, whereas the actual is coming 275, right? So it is under applied to the production. So now what entry will pass? Basically, how we'll do? We will do what? That this applied account we will close. 150, sorry, this applied account we will close 225,000. So we will transfer it to the we can say factory overhead control, right? I will transfer. How much amount I will transfer? The total 225,000. I will transfer. So applied debit. So it means a control account credit. Understand? Applied debit. So factory overhead control. So what I'll do now that our overhead applied, what I am doing, debit. So here I record 225,000 overhead applied, right? I will be debiting the overhead applied. Okay. Overhead applied, I will be debiting. So what about the overhead control, right? Overhead control, I am crediting. So how much amount I'll show that overhead control total amount is 275. So what you have to do, this entry comes in the MCQs, right? So you have to do it very simply that how much you have applied account, applied total 225. So applied always debit, control, overhead control always credit, and difference will go to the cost of goods sold. So we do know our credit side is 275, our debit side is 225. So the difference will go to where? Cost of goods sold. As I told you, it is under applied or over applied.
It's under applied.
It is under applied. So
because yeah.
So it should be, because I am solving the both type of questions.
So we pass the entries in order to meet the actual, right?
Under applied, right? This is the case of under applied. So again, I am telling you, so what entry I'll record if insignificant inventory is all over or under applied overhead charged to the cost of goods, right? So we'll say that again, I'm telling you that applied account always debit, control account always credit. So 275 minus 225, the debit side is short. So I'll write down the difference in the debit side, that is 5,000. This is called cost of goods sold under applied, right? So you understand this? So this question basically comes in the exam. Actually, if you see in the book, they have not explained under or applied, etc. here. So they will explain later on. So, but I don't want, I want that the complete concept you should understand in one shot. So we have understood that what is that? The first of all, we understand how the flow of cost is coming, right? That material goes to work in progress, labor goes to work in progress, and estimated overhead also go to work in progress, and from work in progress, the cost will be transferred to the production, right? Okay, Farid, you can go. Please practice well. So it will go to the work in progress, and work in progress, it will go to the finished good, and finally it will go to the cost of goods. Next thing we have seen that basically there is a difference coming in the estimated overhead and the actual overhead. So as we know that finally all actual costs should be recorded in the accounts, right? So at the end of the period, normally at the year end, but some companies are doing 6-month closing, some are doing the every monthly, right, closing. So that accordingly they will total, and the difference of these they will transfer to the cost of goods sold. They will transfer to the cost of goods sold if inventory is either material, work in progress, and finished goods are very small, right? But let's see the other case. Other case is that if significant inventories, if what? Significant inventory, so what entry will pass? So here I have given in the question another thing, proportion of we can see if they have given so the inventory is position that 20% we have inventory in the work in progress, 20% we have in the finished good, and remaining 60% is transferred to the cost of goods, right? So right, if we have the cost, right, for example, if I say that 100,000 is the amount come in the work in progress, out of 100 we'll say that 80 is transferred to finished good, and 20 is still there in the work in progress. 20 is still there in the work in progress. So of course 20% is a significant inventory, it's not small. So what we will have to do, that here we have charged all difference over or under applied, basically we have charged to the cost of goods sold. But if we have inventories values higher, significant, then this 50,000, we will be transferring to all types, work in progress as well, finished good as well, and to cost of goods sold. How we'll do it? Simply 50,000 into 20%, that will come 10,000. 50,000 under applied into 20%, that is again 10,000. 50,000 into 60%, that will be 30,000, right? So simply, what will be the entry in this case? In this case, entry, the applied and control entry is the same, right? What we'll do, over at applied is debit 225. Yes, Marcel.
Boss, from where we get the percentage above the 60 and this
Yes.
here,
Very,
yeah,
very
yeah, yeah.
question.
Yeah,
Right.
only,
Very,
yeah, this, it's from question or we calculated?
answers are two answers, right? So first of all, either in the question they will give the percentage, right? But sometimes they are not giving the percentage. Sometimes they are not giving the percentage. So we can estimate in this case, like we can estimate, right? So actually this particular question, right, I have solved in the when there is no inventory, but actually in the earlier solution, right, when I was doing, so I had made it according to this percentage, right? So here I'm keeping no inventory, all is transferred, right? All is transferred. So it means that, let's see, if I copy this all, right? So if I copy this all, so here we will do when they say their work in progress is 20%. So of this 455,000, right, this all cost is coming. So I should see that how much amount of all these 455, 80% will go to finished good, right? So what will be the 80% of 455? Can you tell me?
Yeah.
$455 into 20%, right? That is coming 91. It means in this case, I will have to do here balance, right? Balance will be how much? 91,000. And so are you understanding or it becoming confusing? So we understand here basically 455,000, 80% is transferred to finished good, right? So what will be 80% of 455,000?
So 91 is like closing balance, closing stock, right?
Closing,
And
yes. 95 is the closing balance, right? So 80% will go to the finished good, right? That will be basically 364 or 5. 64, right? 364,000 will go to the finished good. So I should write here 364,000 is coming to the finished good, right? So, right, so 20% like this is balance ending inventory, and 364 is the amount transferred to the finished good, right? And this is coming here. Next, again 20% is a finished good inventory. So whatever we have 364, so of this, right, we will calculate 364 into 80%, right? 364 into 291, 291,200, right, will be basically going to cost of goods sold, and 20% of 364 that will be the balance carried down, right? So that will be how much amount? 364, 20%. 364 into 20%. That is 72,800. So what will be the balance here? 72,800. Fine. These are the two inventories. So how much amount is coming here in the cost of goods sold? 291,200. Right? Are you people understanding this?
Still some confusion.
Yes, because no, I think for example, how much total cost we have in work in progress total? 455,000. Right? In the normal scenario, probably 91,000 will be given to you. That ending inventory is 91,000, or sometimes they give you 20%, right? So two ways possible. Either they will give you percentage of inventory, or they might give you the ending inventory of work in progress and the finished good, right? So if they ask you they give you percentage, so total cost of work in progress multiply by, right? You have to do total cost of the product. First of all, like we have to make the inventories like this. So here I'm doing only factory overhead, right? Here I'm doing only factory overhead things. Space. Right, so 365, 364, 91. Marcel, which is which is looking confusing to you?
Now it's
How
clear. Now it's clear.
91,000 calculated in work in process account? 91,000.
Okay, I'm telling you. How much we have total cost? 455, right? Okay.
Yes.
450,000. Sometimes they give you inventory, work in progress inventory is 20%. So what we'll do? 364 into 20%. Right? Where is it? Sorry, 455. Total is 455,000.
455, yes, sir.
2.2. That is 91.
Okay. Okay.
So total is this, and then of this 20% is there in the ending inventory. So remaining you can calculate 80% that will be transferred to the finished good.
Finished good.
Right?
Okay.
Similarly, now 364 is the amount coming in finished good. So they have given 20% is in the ending inventory there in the finished good. So 364 into 20% will be 72,800, and 80% is going to cost of goods sold. That's 291,200. That is coming here. Understand? So we are
Yes,
doing
sir.
the next scenario. So already we know that everything regarding the material and all is same. Now regarding the overhead applied is 225 and actual overhead is 275, right? This is 225, right? So there is a difference of how much? 275 and 225. How much
50,000.
difference? 50,000. That already we know. That we have basically transferred if significant. If insignificant. So we do know applied account, we will always debit, right? How much applied account? 225. Control account we will credit, right? Because applied account we are closing. Already there was 225. So I'm closing. So 225, I am debiting applied and I am transferring this amount to control. That is why applied is debit and control account is credit. Applied is debit and control account is credit. So difference is going to, if insignificant inventories or no inventories, all difference will go to the under applied, over applied. It will go to the cost of goods sold. But we are doing the second scenario. In that we have seen that we have significant inventories, right? So in this case, what we are going to do, this 50,000 difference, basically we will transfer where to work in progress as well, finished good as well, and cost of goods sold. So very simply 50,000, 20%, right? So under applied overhead 50,000, 20%, 10,000, right? To work in progress, and again 10,000 to finished good, and 50,000 into 60%, 30,000 will be going to the cost of goods sold, right? This is, so how the entry will pass? Applied is debit, control is credit. There is no difference, right? So the applied and control will record the similarly, only where we have the cost of goods sold only here. So now instead of that, we will write the all 10, 10 and 30. Marcel, do you understand this point?
I already understood how to.
Right? So this is the basically we have understand two concepts. First of all, we have understand how the cost flows from material to the cost of goods sold. Second concept, we have understood that what will be the treatment of under applied and over applied, right? So this is the case of under applied. Let's see, now I'm coming to the wait a second. This is, yeah, this is over applied, right? So here I am writing actually both of them. So better I should write down. This is under applied. Okay. And this is over applied. Okay. Now, what is the situation here? Everything is the same because I am doing it according to the insignificant inventories. According to insignificant inventories, like all amount is coming finally to here. Actually, amount was different, right? So let's see here. So we have here now, even the question that 120 is the material, 100 is the 100 is transferred to the 120 you buy, 100 you transfer to the work in progress, and labor cost is 200. All 200 is coming, and 150% of 200 that will be our overhead cost, right? So this is the amount total 600,000, and here they mention that of 600,000 that if we have 20% of the or if they give us that finished good transfer, either they give you percentage or they give you amount of amount transfer to cost of goods sold or the inventory, right? So both is possible, right? So anyway, 480 is going to the cost finished good, and out of 480, 360 is going to the cost of goods sold, right? From finished good to the cost of goods sold. Now we have to, this is the same what we have done. I'm not going on that. Basically, we are doing here, what main thing we are doing that our actual overhead was coming how much? 300,000. And estimated also 300, right? So let's little change. Okay, here I made the overhead control account. So total of this is the total how much we have cost 270,000 actual overhead. 270,000 actual overhead we had, right? But the difference, as we know, it will go to the cost of goods sold, right? So because applied account now, as I told you that first of all I have to close the applied account. So how much applied account I will transfer to the overhead control? 300,000. Am I right? Marcel, you understand?
Yeah.
So 300,000 the applied account you will debit and control account you will credit. Now here what is happening that applied was more and control is less. So control is total here up till coming here 270,000. So of course I have to do closing by the higher amount. 300 I'll write down here, 300 I'll write down here, and then difference will go to the cost of goods sold. If we have insignificant inventory, all will be going. Already we have seen applied debit 300 and then control credit 270, right? And the difference is going where? To the cost of goods sold, right? So this is the case of under applied or over applied.
This is over applied because actual was less than applied.
Yes, so actual was you can say 270, applied is 300. This is the over applied case. Once it is over applied case, so we can understand the entry is the same. Applied debit 300,000, control credit 270,000. So difference will be going to the cost of goods sold, right? So this is the entry. If we have seen significant inventory, but if there are insignificant, if there are significant inventories, so what we'll do, as I told you that basically this the, 300 applied debit and control credit, this will be same way. Only thing, this difference, that is 30,000 of the applied, you will do the adjustment, right? 30,000 is our under applied. I think it is over applied. Huh? So because sometimes I copy from the one question the other, that's why. Okay, this is over applied case, right? So over applied, we have 30,000. 20% will be 6,000. 20% finished good will be 6,000, and 60% is. So simply we will pick up this 668 and applied debit and control credit. Already we have done applied debit and control credit. So all the remaining, the difference we will transfer to the work in progress and finished goods, and finally to cost of goods sold, right? So do you understand this particular topic, right? We covered today job order costing. So we discussed that how material is transferred, right? How material is transferred to the work in progress, how labor is transferred to the work in progress, how estimated overhead will go to the work in progress. Then, right, this will go, if there is no inventory, all costs will go to the finished good. But if there is inventory amount you should write down, right? Right, inventory amount you should write down. The WIP, this WIP account, the WIP ending inventory, or I can write down the balance here. 120 and 48,000 is transferred to the finished good. And same they mention, either they will mention you 20% or they will give you ending inventory amount, right? If ending inventory amount is given, so you'll keep here. Remaining will be transferred to the cost of goods sold. Now here, all amount is reached to cost of goods sold. So if the question comes of under applied and over applied, then in this case you will see there we have applied 300 and we have actual basically 270. Applied account you will debit and amount you will transfer to the credit side, right, of the control account. So here 300,000 is coming on the credit side. So of course here is total was 270. So difference is 30,000 that will go to the cost of goods sold if it is insignificant inventory. But if it is significant inventory, so how we will do it? That difference we will be transferring to where? WIP, finished good, and control account. So do you have any confusion in understanding that? Yes. Do you have confusion in understanding the job order costing? These sheets I will transfer you, right? I hope.
No more confusion.
Okay. Again, let's see in the job order costing, what will be the entry once material purchase. So material debit or inventory debit, accounts payable credit. Once material transfer to production, so it's coming into the production, means WIP. In WIP, work in progress or work in process, it will be debit and raw material will be credit, right? Once labor cost incurred, so it's incurred to WIP debit and wages payable will be credit. Factory overhead applied, estimated overhead. So of course, estimated overhead, I told you that it will go to work in progress, and estimated overhead core is the factory overhead applied, that will be credit. Next we have once the production is transferred to finished good, right? When the production completes, so what we'll do, entry will be WIP debit and finished good debit and WIP credit. So now everything cost reached to the finished good. If you have sold, so cost of goods sold will be debit, and because inventory will go out from the finished goods, so finished good will be credit, right? So these are the entries you're passing. Actual factory overhead incurred. So actual factory overhead incurred. So we have already seen that rent incurred. So rent debit, payable credit, right? Or sometime prepayments we have. So this is the other way. So depreciation debit, accumulated depreciation credit. So each amount factory overhead will be debited and the expense account will be credited. Then we have already seen that over applied factory overhead. Over applied factory overhead, we have already seen. I told you that applied always debit, control always credit, right? Because over applied, so applied amount will be more. So on the credit side, cost of goods sold will be coming, right? Cost of goods sold, or sometimes we do know that WIP, finished goods, and cost of goods sold all will be credit, right? And if it is under applied, so it means I told you applied always debit, control always credit. But here in this case, we have applied is less in under applied, right? So applied side is less, debit side is less. So cost of goods sold will also be coming in the debit side, right? Is there you have any confusion you have in this? Understand?
No, sir.
Okay. So we have covered the job order costing today. All right. So job order costing is finished. So you say that you don't have any particular question, right? What is the process costing?
Making of homogeneous product in big quantities.